The big story in the markets today is the hot jobless claims number. The number came in at the best level since 2022. No one expected such a good report. And, this kind of comes at odds with the ADP number and the employment component of service sector ISM, both of which came in lower than expected. And those numbers actually boosted the Fed's rate cut bets all the way up to 89%. But, the data here hasn't been updated, but I guarantee you that with the latest jobless claims number coming in below 200,000 at 191,000, these odds have fallen. And as a result, so have the moves that we've seen in the markets. Throughout this move, we have been driven by increasing bets for a Federal Reserve interest rate cut next month. But today's jobless claims report is beginning to cast doubt on it. And MNQ, you can see that on my short-term basis, the BK trend SMA meter is turning red, which indicates that on a short-term basis, this rally is running out of steam and NASDAQ could start to reverse lower. And if we really drill down, you kind of see that. You see NASDAQ starting to turn lower. And what's really important here is that if we drop below the 50 SMA on the 1 hour chart, that will become a much deeper slide down to 25,500. So we're at a very critical point in NASDAQ, and the SMA meters are starting to turn bearish, which suggests that the rate cut bets have moved lower off of the jobless claims report and should lead to a bit more of a drop in NASDAQ. Now, in terms of gold, it's also affected gold. Now, gold, you're seeing, is not doing as poorly. We still have a bunch of the SMA meters positive. Now, you would think that a weaker jobless claims report is good for the dollar, bearish for gold. And we have some indications to see that gold may move lower, but this tells us that traders are not necessarily convinced that this will be enough to stop the Fed from cutting interest rates next week. Now, I kind of agree. I think jobless claims is very volatile, especially on a weekly basis, and the ADP and service sector ISM should be more important, but it's still definitely something that's important to watch. Now, as for the US dollar, you can see dollar yen has been, bearish for quite some time, and, it's below the 20 SMA, which is super bearish, still bearish in the 5-minute, 15-minute. So the dollar, what's interesting is that initially it did pop of the jobless claims. This is the pop that we saw, but since then it's moved lower. And all of this is telling us and confirming to us that while the jobless claims number is good, the market doesn't believe that this will stop the Fed from easing. That's not good enough to erase the downside sentiment that's driven by the other numbers, ADP and ISM services. I think I kind of agree. So dollar yen for now still moving lower, though euro dollar is holding on to its gains. 1D 4-hour basis still very bullish, and so keep an eye on that. But this is the biggest story today, and this is how it's affecting the markets. Now, also, don't forget to subscribe, follow our channels if you want to be updated on stories like this.